Hi, and welcome back to Stop Being Sold. My name is Michelle, and I'm here with Brian. And in this video, we're doing a deep dive into MYGAs, or multi-year guaranteed annuities, and we're covering everything from 2023 updates to the taxes on MYGAs, and why so many people are rushing to buy them at record rates.
They are, Michelle. I've never seen the amount of interest in MYGAs than I have right now, and I've been doing, the financial advisor for nearly 25 years now. And I'm glad we're doing this video because people need to understand what they're buying out there. Annuity contracts can be tricky to understand, so make sure you watch to the end to make sure you fully understand the ins and outs of this financial product before you buy one.
All right, well, let's start with a quick definition. What are MYGAs?
MYGAs stand for Multi-Year Guaranteed Annuities, and they're a contract between you and an insurance company, and they're a type of a fixed annuity that focus on accumulation of savings versus creating an income stream.
Got it, and that's a key right there.
That's the key.
Focus on accumulation of savings rather than creating that income stream.
Right.
All right, so how do they work?
In simple terms, you pay a lump sum of money to an insurance company, and they in return will give you a specified amount of interest for a certain number of years. Okay. For example, let's say you deposit $10,000 to ABC Insurance Company for 5 years, and they can guarantee you a fixed rate of 5%. At the end of the 5-year period, you take your money and run, renew it again at the new offered rate, or transfer to a higher paying MYGA. Totally up to you.
Okay, so can you talk to us a little bit about the laddering strategy that people use with MYGAs?
Yeah, one strategy that people use is MYGA laddering, very similar to CD laddering. And It's a unique strategy to ladder a basket of different annuities. Okay. What you're doing in this process, Michelle, is you're buying short-term, mid-term, and long-term, or real simply put, 1 year, 3 year, and 5 year MYGAs to try to hedge against rising interest rates. And you're not locking up all your funds over a longer period of time for what may be reduced rates in the future.
Okay, so switching gears here, what's changed for MYGAs in 2023? Now, rates are higher, but what else do viewers need to know?
Yeah, that's the big thing. Rates are definitely higher.
Way higher, right?
Very exciting, actually. Our clients are finally making money on MYGAs. So, but as the stock market faced a downturn last year and interest rates continued to rise again this year, investors are searching out MYGAs because of stability and the attractive returns. This financial option, Michelle, has gained significant traction, and to the tune of annuity sales reaching a record-breaking $80 billion in the third quarter of 2022. That's a 27% increase compared to the previous year. And the surge in sales can be attributed to concerns over the stock market volatility and the potential for a recession. Kind of reminds me, Michelle, back of the 2008 financial crisis.
Did you see this with MYGAs where they skyrocketed?
Yeah. Yes, definitely. There was a huge interest in MYGAs because of everything that was going on in the market, and they searched out stability, and rates were rising a little at that time.
I was just going to say, it's that word, you said it earlier. This is the second time you've said it. It's not just about attractive returns, but stability.
Stability, yeah. And also, the Federal Reserve right now's rapid interest rate hikes to calm down inflation has further fueled the demand for MYGAs, and investors again are seeking protection and turn into annuities in record numbers.
So is this trend expected to continue driving growth in the annuity market?
As long as the rates are the same or higher, and here's why. You got the Federal Reserve's benchmark interest rates may not directly impact annuity interest credit rates. There's a huge correlation between rising interest rates and higher annuity sales. As interest rates increase, insurance companies can offer more attractive rates due to higher bond yields. This allows investors to earn more on their annuity investments, contributing to greater wealth accumulation for their retirement. Okay. Over the previous years, though, when we were near 0% interest rates, annuity rates remain super low. They fell right in line with them. But considering the current economic climate, MYGAs present a pretty appealing investment option. They provide the stability, reliable returns, and guaranteed retirement income amidst market volatility and rising interest rates.
Okay, so actually this rolls right into my next question I want to talk about the advantages of MYGAs, which you just listed quite a few. Are there any others?
Yeah, some of the pros of MYGAs, tax-deferred accumulation of the savings, higher rates than most CDs out there, you get a guaranteed interest rate for a specified amount of time, 1 year, 3 years, 5 years, all the way up to 10 years I've seen. Less risk than the stock market. Unlimited contributions for non-IRA accounts. That's key. That's huge. Penalty-free withdrawals of interest, depending on the carrier and the contract, and also penalty-free withdrawals of up to 10% per year, again, depending on the company and the contract.
Okay, I have a quick question. You mentioned unlimited contributions for non-IRA accounts. So let's say I put $50,000 into a MYGA or 5,000. It doesn't really matter. Maybe stick with 5. It's easy. If I set that up, say I'm guaranteed a 5% return over the next 5 years, can I continue to add to that, or do you have to set up a new MYGA account?
Depends on the MYGA.
Okay.
Some MYGAs allow additional premiums, usually only for the first year. Other MYGAs are basically you put it in, that's it. It's a one-time drop. Okay, so it just depends on the contract.
All right, and again,
Great
read
question.
we say this all the time in all of our MYGA videos. Read that contract, like
Ask
the
questions.
fine print, right? Exactly. Ask a lot of questions. All right, so let's move on to what are the negatives or the cons of MYGAs?
Yeah, big negative is the surrender charges.
Absolutely.
With every annuity. Okay. A penalty that comes into play when you surrender an annuity contract before the end of the term. Surrender charges can be costly. So if you're going to buy an annuity, make sure you stay in that contract to the end of that term, or then penalties will hit you pretty hard. Also, another downside are market value adjustments. And these are a monetary adjustment that can be applied to an annuity contract if you make withdrawals beyond what's allowed. Remember, I talked about the 10% each year.
Right.
You make withdrawals beyond that amount, they can hit you with an MVA charge on top of surrender charges.
So it can get really costly.
Yeah. And last, a big negative is they're not FDIC insured like a CD is.
So if they're not FDIC insured, are MYGAs considered risky?
MYGAs are backed by the issuing company, which is the insurance company, right? Your main risk here is with the claims paying ability of this company. So if you're buying a MYGA, make sure you look at the ratings agency
of that company.
You'll see A, B, C rated. Well, first of all, don't even look at C rated, and be very careful in the B rated companies.
So is this where you'd go to something like Moody's to look for that?
Yeah, look for the ratings of each company and ask the companies, because they will provide you with what their current ratings are with each one of the rating agencies.
Okay, got it. All right, so let's say I buy a MYGA and I keep it until maturity. What are my withdrawal options?
Good point. Once your MYGA reaches the end of the term, at maturity, you got several options to withdraw your money. You can basically just take all your principal and all the interest earned and walk away. Some companies allow you to renew the contract at the then current rates, so whatever they are at the end of the term. Okay. And then you may roll over, exchange the MYGA for another one without paying taxes on them gains.
Well, let's talk about taxes. That's my next question. How are MYGAs taxed?
Okay, depends on what type of MYGA you have. Could be qualified funds like an IRA.
Okay.
If you use qualified funds, you'll be taxed when you withdraw the funds. It's considered income and will tax both the principal and the interest earned because it's a qualified account. Okay. But with non-qualified funds, which is like cash, you put in 50,000 cash into a MYGA, you're only going to be taxed on the interest earned. So if you put in 50,000 at the end of the term, you have 60,000, you're going to be taxed on the $10,000 of interest that was earned on that account.
All right. So listen, we're going to put a video below the description and the pinned comment on 5 reasons why not to buy an annuity despite the great rates. Go check that out. Brian and I are big believers that you understand both sides of the conversation. And what was that? Third quarter of last year, it was $80 billion in MYGAs sold. And so they are selling you these things. You need to understand what you're actually being sold.
Yeah, annuities are sold. They're not bought. You don't wake up tomorrow morning and say, hey, I'm going to go buy me an annuity today. That just don't happen.
No, absolutely. Well, thank God. I'm just kidding.
Some people love them. They will continuously buy them. So
Sure. And I understand why. All right, here's the thing. If you like the content of this video, hit that like button. Help us grow this channel. Subscribe. Brian and I put out videos on the daily that help you make the best decision for your financial future. We cover everything from IRAs, annuities, Social Security, news, what else? 401ks, you name it. So All right.
political.
Make sure to subscribe. Yeah, even that. I mean,
Every time Congress makes a move or makes a new bill, there's ways that it negatively or positively affects you. So
absolutely. So we cover that too. All right. Thanks, Brian, so much for this. And thanks to everyone who watched.
thanks, everyone. Have a great day.